Group 1 and we had Amyris Company. Their vision statement is
aim big and broad, creating prosperity for people, the planet, and business.
Their mission statement is solve global problems with innovative solutions that are both renewable and sustainable. Real solutions that don't comprise on performance, affordability, or availability. Their value statement is make good together, make a good impact, make good things, make good processes, and also make good choices. They were founded in 2003. Their original business plan was commercialize fermentation technology. In 2006, they hired John Mello to become CEO of the company. He had an idea of expanding into the beauty. He also wanted to get into consumer products and commercially viable enterprises. The company went public on the NASDAQ in 2010. They bought and built many businesses like Bioscience, for example. They bought many businesses to buy them small and improve them into bigger companies, bigger brands. They wanted to do this through ingredient development. They continued to buy more brands throughout the 2010s, and then in 2020 the pandemic hit, in which they partnered with a company called Infectious Disease Research Institute, where they helped excel the vaccine. Later in 2020, they also partnered with Rose Inc. Incorporation. With this company, they bought Costa Brazil. With this purchase, they also bought 6% of Rose Inc. Through all of these expansions in their company and all these acquisitions of assets, in 2023, they ultimately went bankrupt and they filed for a Chapter 11 bankruptcy. What this means is they put their debt on hold while they remodeled their business plan. Around this time, John Mello also resigned from CEO of the company. Because of the bankruptcy, they also decided to partner with a company by the name of PricewaterhouseCoopers, also known as PwC. This was to help their financial standings. The idea with PwC and Amyris was to cut costs. They did this through cutting labor, reducing labor, and also simplifying their business portfolio. And they also sold their expansion businesses under their name to other companies for liquidized assets. In recent years, they've managed to come up with about roughly $500 million to help pay off their debts.
My name is Tatum Stitzel, and I will be going over the pest analysis. A pest analysis takes a look at important macro factors that affect an industry, specifically the political or legal, economic, socio-cultural, technological, and environmental factors. When looking through these different factors, we found that there were many that impacted the biotech industry, and I will be going through the top 8 factors we found and the ways in which they affect the biotech industry and Amyris. The first factor is an economic factor, which is that within the biotech industry, many patents are running out. This causes companies who created new products to lose market power. Amyris was able to reap the benefits of creating new products for a while, but then losing patents caused other companies to come in and create similar products at a lower price. The next factor can be considered both a political and environmental factor. New environmental standards from Biden are requiring companies to have to produce products in a more sustainable way to protect public health and the environment. The implementation of these new standards will cost companies a lot of money because they will have to source products more sustainably and spend more money on creating products in a green way. Another environmental factor comes from companies now being expected to engineer eco-friendly products. Biotech companies work to engineer products that are helpful for the environment, such as soil and other plants. This is an opportunity for Amyris, as they can focus on creating helpful environmental products as society tries to be more environmentally conscious. A technological factor that is now emerging in the biotech industry is the use and implementation of AI. Companies are using AI to help manufacture plants, and there are continual new advancements in biotechnology, such as creating organ cells in plants. AI can help companies become more efficient and cut costs, When it becomes developed more, it may prove a very useful tool for continued innovation. The socio-cultural factor we found to be most influential was the ethical concerns that surround biotech. Laboratory production and ethical concerns have become a focus around biotech. People expect companies to produce their products with concerns to safety and producing products in an ethical way. Being careful not to harm animals, humans, and the environment is a concern for many. Consumers have become more concerned with the ethics and safety for the products they buy and the companies they buy from. Companies who are concerned with these issues will appeal to these types of consumers. A factor that economically affected the industry was some startups in the biotech sector had their money in the Silicon Valley Bank and were hit hard by the bank failures. Biotech is an area that relies on innovation, so there are many opportunities for startups to create something new. Amyris did not necessarily get hit hard by the Silicon Valley Bank failures, but some of the smaller startup competitors were disturbed by this event. Another political factor we found relates to the uncertainty of the future with changes made to regulations. The political environment is changing and many regulation issues are up in the air. This can cause some volatility for biotech companies who may have to switch their production methods to fit new requirements. Suddenly changing environmental and regulation requirements imposes costs on the companies it affects. The company has likely strategically planned out their production process, and new regulations disrupt that process. Our final factor is yet another political factor, which involves the long FDA approval process, which greatly affects the companies in the biotech industry. Long drug approval processes mean spending more money to get products on the market. The FDA continues to monitor the drugs after they've been on the market. It can also take certain drugs a long time for the FDA to even start the approval process. This is one of the parts of the process that is most important to get a drug on the market, but also affects biotech companies significantly. For example, if a drug gets approved, but the FDA monitors it after and decides that it is not safe, the company cannot sell their drug anymore and will lose money.
Now let's talk about Amyris's main competitors and substitutes. Starting off with their competitors, their first one is Genentech Incorporated. This is a main competitor. They're considered a leader in the biotech industry. They have great employee and customer retention. Moving on to our next rival, AbbVie Inc. They have many diversified products and innovation, strong manufacturing capabilities. Our next rival, Amgen Incorporated. They are the world's largest independent biotechnology firm. Last main competitor is Bayer Corporation. They're not doing as well currently as some of the other competitors, as they are experiencing a fall in sales and lower gross and operating margins. Now moving on to some of the substitutes. Substitutes for Amyris products are Pfizer. So Pfizer is not a biotechnology company, but they do have a lot of medication and stuff like that serve similar customer needs to products in the biotechnology industry. Next, we are going to talk about Cargill, which is another substitute. Cargill, again, is not part of the biotechnology industry. ExxonMobil sells traditional fuels. And our last substitute is CF Industries. They are currently the world's largest nitrogen company in the world, and they focus on producing fertilizer. Moving on to Porter's Five Forces. Porter's Five Forces assesses the strength of rivals, new entrants, substitutes, buyers, and suppliers. So we just talked about rivals and substitutes, but now we're going to talk a little bit more about new entrants, buyers, and suppliers. We all work together as a group to rank the various forces from Porter's Five Forces model. And what we found was our first place, as in having the strongest force, was the rivals for Amyris. They have the same target audience, and in general, rivals is a very strong force for many other companies. Second place as having the strongest force is the new entrants. So the biotechnology industry is currently going through a lot of growth. It is a growing industry, and there's a lot of new entrants right now coming in to take part of the market share. Our third strongest force in the model is the substitutes, which I talked about earlier, may not be in the biotechnology industry, but they still may take some of the customers looking for those type of products. Buyers and suppliers were ranked 4th and 5th, respectively, because they didn't have the same power we found as rivals, new entrants, and substitutes. Now we're going to talk about some of the opportunities and threats that face Amyris. Our first major opportunity is AI. They might be able to use AI to help manufacture plants and new advances in biotechnology. They may use that and lower some of their costs as well within the company. Next, one of their opportunities is customers are starting to voice their ethical concerns more. So Amyris has already been focusing on having sustainable and clean products. Another opportunity is that the industry is growing. There's a lot of profit to be made in this industry. Another opportunity for Amyris is to focus on creating very unique products. They are coming out of bankruptcy and they're currently focusing on restructuring their company and restructuring their debt most specifically. As we've talked about, they don't have financial difficulties in the future. Some of their main threats include the new environmental standards coming from the Biden administration. These new standards are requiring companies to produce more sustainable products. And even though Amyris is pretty good at this, the new restrictions might cause them to have to produce some of their products differently, which could end up costing them more. Another threat is patents run out, and so when a company applies for a patent, they're basically saying I have a new idea and I should be able to have market power for a certain period of time to sell my products so I can make back the money spent on research and development. But what happens is usually these companies will have their patent and they'll sell at whatever price they want as they're the only company that sells it, assuming that there's a strong consumer base. So when these patents run out, there's a lot of companies that can kind of swoop in and take some of their business. So that's a major threat for Amyris. Another threat is that there is such high competition among rivals, and companies will need to really focus on differentiating their products. Our last major threat is there are many products to choose from, so in the future there may be lower switching costs for customers because there's more companies coming into the picture.
Hello everyone, my name is Mia Colonna, and today we will be discussing the internal analysis of Amyris, a company that is currently navigating through a complex landscape. In this discussion, we'll be exploring the strengths and weaknesses that shape the core of Amyris's operations. Starting with their core competences and strategic moves. Let's start by understanding Amyris's core competences. As we've seen, Amyris excels in innovation and sustainability, particularly in developing sustainable ingredients and consumer brands. The team has strategically expanded, with plans for finishing plants in Reno and São Paulo, a move that not only cuts back on supply chain issues, but also introduces 8 new consumer brands. This not only enhances their brand recognition, but also positions them strategically in the industry. Secondly, their strengths, distribution network and resilience. Amyris boasts a reliable distribution network that reaches over 20,000 products worldwide, catering to more than 300 million consumers. Having this large of a network can be a significant resource for Amyris. Furthermore, the company demonstrates resilience, incurring adverse situations while showing their ability to manage operations during challenging times. Thirdly, their weaknesses, financial struggles and high fixed costs. However, in this industry, it is crucial to acknowledge the weaknesses. Amyris has struggled with ongoing financial troubles, which has been indicated by an 87% drop in their stock prices in the recent years, as well as their ongoing increasing fixed costs as they attempt to limit the company's flexibility in adapting to the challenging market. With the recent reduction in the workforce, a cost-cutting move on Amyris may incur challenges in the future when the company needs to hire and train new workforces. The fourth being their strategic response to external factors. Amyris faces the challenges of new environmental standards. The Biden administration's push for sustainability is not only a societal benefit, but also a challenge for financially struggling companies like Amyris. While the company is already making strides for sustainability, future restrictions may implement further changes in their business practices. Lastly, high competition and differentiation strategies. Another external factor is the high competition within the biotechnology industry. With over 6,000 biotech companies in the United States alone, competition is fierce. Amyris, who is operating in skincare, medication, sweeteners, and polymers, is strategically planning to launch 8 new consumer brands as a means of differentiation. However, the simultaneously selling off of existing brands raises questions about maintaining consumer trust and loyalty. In conclusion, Amyris is navigating through a complex landscape of challenges and opportunities. While their core competencies in innovation and sustainability serve as pillars of their strengths, financial struggles, and highly competitive biotech industries, it still presents significant challenges.
Today, we're diving into Amyris Biotech SWOT analysis and their strategies. Amyris has some notable strengths that include additions and expansions, reliable distribution network, successful complementary firm integration, and reliance to adverse situations. The first strength of additions and expansions, we gave a score of 0.52. Amyris strategically invests in additions and expansions, indicating a commitment to its growth. The second strength we found was the reliable distribution network, and we gave them a score of 0.33. The company's strong distribution network ensures efficient product reach. The third strength we found was successful complementary firm integration, and we gave it a score of 0.24. Amyris has a track record of successfully integrating complementary firms, strengthening its industry position for the future. The strength we noted was their reliance to adverse situations with a score of 0.12. As we didn't think this was the most important, it did demonstrate the adaptability to face challenges and showcases Amyris' resilience. With our first weakness, we saw that they're selling brands. We gave them a score of 0.26. Amyris recognizes the challenge of selling brands, especially with an imminent loss of patents. The second weakness we found was overstating its assets of a score of 0.24. There's a need to address accurate asset representation for enhanced credibility, and we found that they were doing this incorrectly. Number 3, we saw high fixed costs at a score of 0.22. Amyris plans to analyze and undercut competitors to tackle industry-wide high fixed cost. Number 4, high cost of hiring with a score of 0.14. Exploring AI to optimize industrial procedures and reduce high labor cost. Number 5, long-term low share price with a score of 0.11. A strategic focus on improving long-term shareholder value is underway and is in need for them to succeed. Lastly, we talked about their poor financial ratios. Acknowledging the need for financial improvement and efficiency is definitely a key if they want to have long-term success. Now let's talk about the specific strategies to leverage these strengths and attack the weaknesses. Our first strategy is AI for cost optimization. Amyris aims to lower labor costs and boost productivity through AI implementation. The second strategy is competitor analysis and cost leadership. Strategic undercutting of competitors to address industry-wide high fixed costs. And then the third strategy is risk reduction in selling brands. Associating brands with expiring patents to minimize risk and maximize its own brand portfolio. Lastly, we're going to talk about the additions and expansions for patent growth. Amyris should advocate for continuous additions and expansions to counter the threat of expiring patents and be the best in the industry. Amyris Biotech is navigating its path with strategic precision, capitalizing on strengths, addressing weaknesses, and positioning itself for its future. In our exploration of Amyris Biotech, we've uncovered a company strategically leveraging its strengths to capitalize on emerging opportunities, from sustainable solutions to expanding into new markets. However, navigating intense competition and regulatory challenges requires a lot of adaptation. Amyris is committed to innovation, strategic partnerships, and cost optimization to provide a resilient force in the biotech industry. Amyris continues to try to shape the future of sustainable and innovative solutions through their unique strategies.
The McKinsey 7S model is a tool that analyzes a company's organizational design. This includes the shared values, systems, structure, strategy, skills, staff, and style that assist in a company's operations. Since Amyris is bankrupt and will be adjusting their current operating strategies to stay afloat, these components of McKinsey 7S will be affected.
As previously mentioned, the company's mission is to do good for both people and planet. Replacing the workforce with artificial intelligence or technology to relieve labor costs and manufacturing costs goes against Amyris' shared values. Along with that, the company has a shared value of delivering high-quality products. By selling off some of their quality brands, they are going against this value. Two things that do, however, align with their values are that Amyris is planning on expanding their business in new facilities and continuing to remain resilient during these difficult times.
In terms of structure, implementing AI will enhance the operating structure of Amyris. by allowing fast mass production and less physical labor. The strategy we suggested of undercutting competitor costs will also affect the purchasing structure of the firm. Employees in purchasing will need to allocate more of their time towards research of industry prices. And of course, adding additions and expansions to the company will also affect the operating structure of Amyris.
Systems are processes that help a company run. This includes HR processes and risk management processes, all of which will be affected by the revitalization strategies we suggested for Amyris. In particular, utilizing artificial intelligence will allow for new and improved systems to be created and formed. This will increase system processing rates and reduce error. At Amyris, it is essential that employees are proficient in biochemistry. Due to their bankruptcy, the company has cut several jobs, losing many of their skilled employees. It will be very hard for them to gain and retain a skilled workforce under these conditions.
The original style of Amyris was to grow their brand with an emphasis on equity, inclusion, and belonging. Since their fallout, this has since changed. Now they are focused on building teams dedicated to sustainability and minimizing corporate environmental impact. They have always had an interest in the environment, but now their focus is more towards that and less for people.
Lastly, staff will be affected. As mentioned before, Amyris laid off a lot of their employees during bankruptcy in an attempt to recover. But at the same time, they are working towards additions and expansions of their company. With that being said, they will need to go through a hiring process to find a new staff that shares the unique skill sets that the company requires. This will be a long, costly process, but in the end will benefit Amyris in their mission to recover.